Hello and welcome to Your Money, your weekly guide to making the most of your cash. Here every Saturday on BBC News Television, available all week on the BBC News website. Making old age more comfortable. Plans to give us a better deal when we swap our pension savings for a lifetime income. Plus, David Beckham spends $14,000 a night on his hotel room. How much do we need to pay for a good night's sleep? Our reporter takes to his duvet to find out. And friends reunited. How to discover lots of lovely banknotes you once knew but have since forgotten. Well, when we retire, some of us will swap our pension pots for an insurance policy that pays us a regular income. That policy is known as an annuity. Its big plus is that it will pay out however long we live. The money won't run out. The big minus is that you don't get much for your money when you buy one. Well, next week there's a new code of conduct that claims it will help us get better value. Tom McPhail is Head of Pensions Research at the researchers Hargreaves Lansdown. Welcome to Your Money. Just going back to basics on this first of all, because the rules on annuities have changed. It used to be you retired, you had a pension pot, and at some stage you had to swap it for an annuity. That is now optional.
That's right. So it used to be the case, as you say, that if not before then by the age of 75, you'd have to convert your retirement savings, the money you'd built up into in this pension pot, you'd have to convert that into an annuity. Now, you don't have to do that anymore. So if you really don't like the idea of handing over that cash in exchange for this guaranteed income, if you want to keep control of it, then you can keep drawing an income from your pension pot right through to the day you die, whenever that is. There are tax implications to doing that, but it does mean that if you want to do that, you get to hand some money on to the next generation. But of course, there are risks and complications in that, and the big appeal of annuities is that they bring certainty.
But it is perfectly possible to have a retirement and not buy an annuity, in theory.
Absolutely correct, yes. And indeed, we see some people choosing to defer buying an annuity when they first come to retirement, and then perhaps taking that risk away later on and choosing to buy an annuity later on. If you never want to buy an annuity, you don't have to. I think most people will continue to buy an annuity, if not straight away, then at some point, because for most people they reach a point where the complexity and the risk involved in managing that income and making sure you don't run out of money or that your investments don't go down becomes more attractive than continuing to keep control of the money.
And that is the big risk, that the money might run out before you die.
Absolutely right, and that's the big appeal of an annuity, is, as you say, you don't get a very high rate of return, but it is guaranteed, and for as long as you live, that insurance company guarantees that they will keep paying you an income, and clearly for a lot of people that's very attractive.
Well, all this talk about shopping around to get a better value, to get a bigger payout every year in retirement in return for your savings pot, is it actually effective? Does it work?
Oh, it's hugely important. There are two aspects to this that I think are worth touching on. First of all, if you shop around, if you go to an annuity broker, if you get them to search the market for you, you get a higher rate of income. There are a dozen or so companies that are actively selling annuities in the UK, and many others that don't even try and compete on price. And the difference can be huge. Thousands of pounds a year difference. A 5 minutes shopping around could increase your retirement income by 20, 30, even 40%. So very much worthwhile. And the other aspect of shopping around is getting you to think about what type of income you want, and particularly whether you want any death benefits. If you want an annuity that will continue to pay an income to your partner after you die, whether you want to build any inflation proofing into that retirement income. So both in terms of the rate and in terms of the type of income you get, it is very important to shop around.
Tom, nice to talk to you again. Thanks for joining us here on Your Money. Tom McPhail from Hargreaves Lansdown in Bristol. Fewer people than ever are saving for old age through a works pension scheme. The government says 46% of staff are saving in an occupational pension. That's the lowest figure on record. You'll see more on that on the Your Money web pages, bbc.co.uk/money. While you're there, you'll also see the companies which decide your personal credit rating are sticking their nose even more deeply into your life. They now want to know how good you are at paying the water bill. Elsewhere in the news, another fine for Lloyds Bank over payment protection insurance. This one isn't for selling the wretched policies in the first place. That mis-selling scandal has already cost the bank billions. This new fine is for not coughing up the refunds quickly enough. That'll cost it another £4.3 million in penalties. The taxman is under fire after naming and shaming people who haven't paid their tax. The Revenue has published the names and addresses of 9 tax dodgers, including a hairdresser, a grocer and a coach operator. The Revenue says that it's going after deliberate defaulters, but some tax experts have accused the taxman of hypocrisy for targeting ordinary individuals but not doing enough to tackle companies like Starbucks, Amazon and Google. And more details on plans to force the energy companies to give us simpler bills. The watchdog Ofgem says energy firms will be limited to just 4 pricing plans rather than the dozens that are out there already. And our energy bills will have to tell us how much we could save if we switched to the supplier's best deal. How much do you have to spend to get a decent hotel room these days? Brian Milligan gets between the sheets.
His choice of car this week may have been rather modest, but David Beckham showed he still has expensive tastes when it comes to accommodation. In this case, the Bristol Hotel in Paris. For 5 months, he'll be staying in the hotel's Imperial Suite, which comes with its own dining facilities and pink marble bathroom with his and hers wash basins. The price, if you have to ask, is £14,000 a night.
So what do you get for that kind of money in the UK? Welcome to the Ritz.
Suites here come with the services of a full-time butler to look after your every need.
Champagne is standard, of course, but this stuff is from the Ritz's very own vineyard.
If anything glitters in this suite, the chances are it really is gold.
Oh yes, and this customised Rolls-Royce will pick you up or take you to your private jet.
As a result, guests sleeping in a suite here pay up to £10,000 a night. And believe it or not, that doesn't include breakfast.
They're getting a whole range of services provided with that sort of top-end suite, heightened security within a 5-star environment, plus, a plethora of services and staff to provide a very personalised service and experience when they stay there.
Room number's 402. Enjoy your stay, sir. Thank you very much.
At the other end of the market, value for money is perhaps rather more apparent. Budget hotel rooms for 2 people can be found for as little as £29 a night outside London. Some hotels will also offer special bargains.
Sometimes they're busy, sometimes they're not very full. If they're not very full, they may be able to do a deal, or you may be able to get dinner at a reduced rate, or breakfast might be included, for example.
Other tips for a weekend away include phone the hotel directly. The internet isn't always cheaper. Ask for a room without a view. They can cost less. Likewise, hotels on the edge of town often have lower rates.
Of course, ultimately, the best hotel rooms are all about getting a good night's sleep. And while David Beckham must surely lie awake at night wondering how to spend his money, most of us have no such trouble. We can always pretend, though. James, lights please.
Certainly, sir.
Well, the papers are full of adverts and articles about tax-efficient ISA savings accounts and share schemes once again. If you want to use your allowance for this tax year, you've got to do it by the start of April. This is what else they've got. The Sun says diesel now costs £7 a gallon, a price recorded on the M4 in Berkshire on Friday. The Mail says that ramps up the pressure on the Chancellor to cancel or delay the traditional rise in tax on fuel in next month's budget. The Independent exhorts us to give our credit cards a spring clean before going abroad for any Easter breaks. It says seek out the credit cards that do not charge for just using the card abroad. That could save £3 a pop. The Times, this story down here, looks at the effect that the fall in the value of the pound this week might have on the cost of your holiday and the money that you'll use abroad. If you are a landlord, the Telegraph says you'll have to go green. If you don't make your house or flats more energy efficient by 2018, you may not be able to rent them out. The Financial Times looks at schemes to help homeowners dodge stamp duty, the tax on house sales. It says the net is closing. Of course, we had the sad news this week that Richard Bryars has died. The Guardian continues its look at the modern version of the good life with a family that swapped its 60 grand a year income for self-sufficiency in rural Wales, and then with a practical bent, how you save money when you're buying for your printer. If you ever moved and forgotten to tell your bank, you might have some money stashed away that's just waiting for you to come claiming it. In the last 5 years, 300,000 people have been reunited with forgotten funds worth £645 million. Brian Capons from the British Bankers Association, welcome to Your Money. This is an amount of money not to be sniffed at. There are clearly some serious sums here that people could get if they just knew how to do it.
That's right. It's quite easy to claim it as well. I mean, normally this happens when people move house. They've got other things to think about rather than perhaps a secondary bank account. They've got the savings, advising that they've moved, or sometimes when a relative dies. But the money is there. It is always there, but, why not collect it now rather than sometime in the future?
Yes. Tracking it down might be the issue. How do you do it? Is it just a matter of thinking, oh, I might have an account with NatWest. I'll walk into the local NatWest and go to the counter and say, I think you've got my money?
Well, if you know the bank, yes, you can do that exactly. But sometimes, if the account dates back for some years, for instance, you may not be quite sure whether it's a bank, a building society, change name, whatever. But going to the My Lost Account website, it's a single portal where you can make a claim, whether it's bank, building society or national savings and investment.
So you don't actually need to remember what bank or building society it is. You can go on this website and fill in as little as you know.
That's right. It's a straightforward form. I think it's about 16 questions to fill in. But fill in whatever you can. You don't have to fill in everything, but obviously the more you fill in, the better chance of actually matching your name with those funds in the bank's records.
Now, you say it's a simple form, but then you speak for the bankers and what they think are simple forms and what the rest of us think are simple forms are not necessarily combined. How long does this process take?
Well, the process itself depends how complex it is. If you've got several banks or building societies that you want a name search to be done, then it can take a little while, but maximum of 3 months. That allows the banks, building societies to go through their records, which can date back many, many years.
What happens if it's a building society or a bank that's been taken over? We've had quite a few of those in the last decade.
Yeah, well, certainly within the background of the scheme itself, there is a list of all of those old banks and building societies. So it's quite easy to match. All you have to do is to type in the name of the bank, building society that you think, or even part of the name, and you will come up with a list of suggestions, and you choose whichever one rings a bell with you. And it doesn't have to be a single bank. It can be several banks or building societies.
And you bankers, of course, very fond of interest. If this money has earned interest while it's been unclaimed, do we get the interest
You
back?
will get the interest, yes.
Brian Capon, thank you very much from the British Bankers Association. Well, if you think you might have a dormant bank account somewhere, Brian mentioned a website, so let me tell you what it is if you fancy being reunited with your cash. It's www.mylostaccount.org.uk. You'll find out more information there and also see the form that Brian was talking about. And that is all from Your Money for this week. You can get alerts to the latest money news from us on Twitter. We're at BBC Your Money. And don't forget the Your Money pages on the BBC's business website. A new quick way of getting them. That's the Twitter address. Let's move it on and show you the web address as well. It's bbc.co.uk/money.